Welcome to Club E. Hi, I'm Rick Brimacombe of Brimacombe and Associates. I am your architect of business growth and will work with you to unlock your potential and amplify the scale of your company. Today, we're talking about how do you forecast in times like these. I want to thank our sponsors, Irish Titan, Boulay Group, CPAs and Advisors, Highland Bank, Romaine Berg, Minnesota Sales, and the Network Connect. Subscribe and like our Club E channel. You'll need a moment here. It's down by the video. I'll wait. Go ahead. Again, subscribe and like it, and that will allow us to deliver better content to you, our audience, as well as let you know when we're going live. I also want to let everybody know that on your favorite podcast platform, we are bringing the Club E sessions there as well. So feel free to reach out in the podcast format as well as watch us here live on video. I'd like to introduce today's speaker, Matt Crane. Welcome, Matt.
Thanks, Rick. Good to be here.
Glad to have you involved today. And Matt's contact info is in the comments field. And then also that will allow you to ask some questions, which I will tell you about a little later. Matt, tell us about yourself, your background, your firm, and the various activities that you're up to.
Yeah, thanks, Rick. I'm part of Boulay. I'm a partner there. I've been with Boulay for a little over 20 years now. Boulay is a group of about 230 dedicated, talented professionals serving the Midwest. Came up through the audit side of our practice, but now I spend a lot of time working with business owners as they tackle some of the tough issues, like we've seen the past few months. And our firm has a variety of services that we help people with, but what's been really busy lately, we've got some fractional bookkeeping where people have looked for us for some help with that. We're talking a little bit about forecasting today, but that's a part of what we do. Help people with business valuations. Also, with our ESOP niche area where we're helping people as they look at exit strategies. So we're helping them on the M&A side, but also helping them with another solution, which is to switch to an ESOP company where the employees own it. Again, happy to be here. This summer's been such a strange summer, I guess, for us with COVID and kind of isolation. We've tried to get on the lake a lot. I've got 4 kids, so when we're not working, we're trying to get out a little bit and enjoy some of this weather.
Well, we definitely have had some good weather and a little bit of normalcy for your family to be out on the water. You mentioned that you have a long history of doing that growing up as well as now with your own kids. So that's a lot of fun to do.
Yeah, they're really at a fun stage where we're able to go out and. I was just telling Lucas before this, we popped 3 tubes last summer. I'm kind of tearing them around, and they're finally getting into some other things, some wake surfing, some wakeboarding, and some skiing. So that's been fun to see them progress a little bit and start to do more of the things that I enjoy doing. So it's been fun.
If it's a good summer when you pop 3 inner tubes.
Yeah.
a 3 tube.
I would also say don't lend a tube to a friend because people like me tend to pop them and then you're starting over.
All right. Hey, and before we get to the event, I know that we've talked about ESOPs here in Club E with some of your partners there. But tell us a little bit more about the interim financial stuff and the part-time financial stuff, just as a precursor to our conversation today.
Yeah, we're really helping people kind of supplement what they have. So we'll come in, on a weekly or a monthly basis for 4 hours or more, depending on what they're looking for. So it could be 20 hours a week, but usually on a part-time basis, we'll come in and fill in. So if companies have had somebody go out on maternity leave for some reason, or either they've left and they just need a little bit of extra help, we've done that. We've seen people cut people recently, and so because of that, they've actually been a little bit short-staffed. So they've asked us to come in and help them out a little bit there as well. So we're kind of a good solution where they don't want to hire somebody full-time, but they'll hire us to come in, and we've got some pretty talented people that in a few hours, a week or a month can help clean things up for them.
And what kind of title or level of responsibility are you typically fulfilling with the companies?
We're doing basic bookkeeping all the way up to CFO services. And so it's kind of a wide range depending on what they're looking for. But I would say most often it's kind of a bookkeeping, accounting supervisor type role. Those are the common ones that we do, or the common ones that we see a lot of help.
Okay. And then I know I've heard from folks, one of the questions that will come up is how fast does it take for somebody to get up the curve, for the particulars of any given business?
I think our people do a pretty good job of that. So it seems like it's a short learning curve. But I would also say, we're usually in there probably the first month or two, and it's probably a little more intensive in those months. And then after that, it's probably a little more routine as to what they have. I would say every business is a little bit different, and depending on when they bring us on, sometimes there's a fair amount of catch up to do just to get them up to speed. And so, but usually within a month or two, then the people are kind of plugged in, and they work with a wide variety of software. So we see some of the basic ones like QuickBooks to some of the more complex ones. It's changed a little bit now where people are okay with us working remotely, where oftentimes we used to be on site before. And so that's changed a little bit from what we do, but we still have people going on site even in this environment.
Mm-hmm. All right. Well, that makes sense. And actually the work from home stuff probably makes it a little easier for you folks to dive in and get stuff done.
It really does. We were pretty well set up with our IT group to work from home, but it's still been a transition. I would say, we're not just working from home, but you're working with your family around you. And certainly in the school year, people are juggling a lot of homeschooling and home learning. And that was a different environment for us too. So I feel like our people did pretty well with that. But I think on average, that's been an adjustment for people. And I would say certainly an adjustment at the Crane household too.
Yeah, for all of us. All right, Say, before we get to our event, let's discuss what you, our audience, can receive for your participation. Again, in the comments field, you can find Matt's contact info, as well as put in your questions. Today's hashtag is #forecast. Up to 3 winners will receive a half-hour consultation session with Matt. And for you golfers out there, a box of golf balls. We're talking 4 sleeves, not 3 golf balls. And again, #forecast. Put in your questions. We'll get Matt to address those here today live, as well as put your name into the drawing to receive a half-hour session with Matt, again, free of charge on that one. All right, Matt, tell us a little bit about what you're seeing from the companies that you're working with as they're navigating through the past couple of months. Obviously, a lot of unusual things going on. First was COVID, then it was PPP, getting a lot of accounting questions about that, as you heard, and then the civil unrest. So just talk a little bit about what you're seeing with the companies that you're working with.
Yeah, it's been an incredible time, just trying time for a lot of business owners and their teams as they try to navigate through what's happened and what's changed. It's really forced people to rethink, their liquidity, certainly their banking relationship. I think if you hadn't had a strong banking relationship before this, I think that's been highlighted as something you definitely need to have because that's been a crucial part. Certainly people were clamoring for PPP loans early. And when I said early, I mean in April. But that provided a lot of relief for people as they faced a lot of challenges early on as to know how long would this last, what would this mean. I would say in the short term, some of the immediate impacts, you've seen some businesses that have really thrived or that we have in our practice at least. Ones that do manufacturing that can sell into these markets. So it's people that are doing filtration equipment, other things that are benefiting from this. We've seen some people been affected negatively. They're selling into the restaurant market, and certainly there's not a lot of new restaurants going in right now. So that's been a challenge and one that we hope that gets back to what we think is normal or what people would enjoy as being normal, being out. We work with a company that is selling a device that can track social distancing when you go back to work at your office. And so some interesting solutions that have come out of this too that I don't think that we would have thought of beforehand, but this is able to monitor where people are at together and then provide a little bit more of a safe return to work environment at least. So that's been exciting to see how they've managed that. Work with a couple other companies. One of them is a remote fitness company that this has really just accelerated what they were doing already in some of their applications. So it's been really interesting to see, on the travel side, we work with people that are in the RV dealership industry and they've just been going gangbusters as people have shifted how they want to travel. It's changed so much just in the last few months is what people want to do and what they think they're going to do for maybe the next year or so. And so you're not seeing, if you're in the hospitality business, it's been a very tough time, unfortunately, for some of these people. So travel, hospitality have been hit really hard, and they get hit earlier than other people, just as people decided to make different decisions. Certainly the companies that we've seen that have had online presence have done better than if you're just bricks and mortar. And so that was a change too that we saw, maybe some gaps in people's strategy as they were coming into this. And so often we're purchasing online, a lot of businesses that are bricks and mortar just hadn't changed over fully. And so that's really pushed them to try to update what they're doing. I don't think I fully appreciated how much of the healthcare industry is elective, coming into this, but it seems like that was really hard hit and hit in a different way I fully anticipated. And to see people being laid off at some of these healthcare groups when it feels like there's a huge need on the healthcare side was eye-opening for me, at least, to see. I think longer term, some of the things that we're seeing is, how do people change from working from home, on a long-term basis? Do they come back? I know companies are evaluating that, and I can say that we at Boulay are thinking about that too, and what that's going to mean. I think if you were anticipating making clothing purchases for working in an office environment, whether that was suits or clothes, you probably rethought that a little bit. And pullovers seem like they're more the norm. I know I saw some good deals on Allen Edmonds shoes, which I like, and I kind of rethought that and re-upped my flip-flop collection after seeing where things went a little bit. So I think we're going to see some changes there, just as people, it affects a lot of people that support supply chain management in your office, and so that's changing how people do business. So.
All right, so
that haven't seen the impact yet too. So if you were lucky enough to have a backlog, you maybe didn't see the full impact at least through June 30th. And you're likely to see it now in Q3 and leading into Q4 as well.
So for these wide-ranging businesses, in some businesses have benefited, others have been hurt very bad, others kind of neutral. It would seem that knowing where the business is going is more important now than ever. Uncertainty, lack of clarity, changes happening. How are companies responding to that?
Yeah, you're right. It's just been a huge change for them. Before, I would say you had a certain amount of cushion just in your normal operations where you didn't have to make such tough decisions. And this has really focused people and forced them to make some tough decisions. It's forced them to make sure they've got good financials, so they're getting relevant and current information. And then to look, and kind of our topic today is to look to see, where do we go from here? What do we do and how do we make decisions going forward? And again, I think for businesses, knowing what they spend money on, knowing what their cash burn is per se, has been hugely important as they try to figure out what's next for the next 6 months, the next year.
So from a forecast perspective, how do businesses actually do it when there's just so many uncertainties? Talk to the audience a little bit about various techniques that they can use, zero-based budgets, et cetera.
Yeah, I don't think there's ever been more of a time where a forecast is necessary than now. I would also say, a lot of times I hear people say, well, how can I forecast in a time like this? And I would say, well, one of the things we focus on in forecasting is the things that we can control, and we can control our costs. So looking at what we're spending, getting a good handle on our commitments, understanding the difference between our fixed costs and our variable costs, and what we can actually move the dial on. You mentioned zero-based budgets. That's something that we help people do as far as budgeting, to look to say, it starts off with building up. What do we have to spend money on? What do we want to spend money on? And what can we do without during a time when we maybe aren't sure what the future is going to hold? And so those tools have become really important for people as they try to manage the next period of time. And, certainly the last 3 months, 4 months have been unusual to the point where people aren't basing their budgets and forecasts off that. Again, I mentioned some businesses hadn't felt the full effect. So they were predicting in April and in May that they were going to have problems, and they're seeing those now. And problems meaning they're seeing slower demand, slower, RFPs for projects that are coming out. So they were pretty important for them to try to manage through that time. And our role in that is trying to help them understand what's in the forecast, maybe challenging some assumptions as to what they're spending money on. So.
And then there's kind of almost in my mind anyway, a pre-COVID time period and post-COVID. How often are businesses updating their forecast now, and how was that different from before?
Yeah, I would say before people were, certainly had annual budgets and forecasts. And then now it feels like it's down to the weekly level for sure for a lot of people where it's rolling. They're usually getting down to some key indicators though. What's really driving the business. I think before there was probably more of a cushion and you really knew where you were at. And now that's become one of those things where people are more concerned about where they're at on a daily or weekly basis. So I would say the forecasts have become better in the sense that they're rolling them more often than they used to. They're not just an annual or quarterly thing. They're looking at them on a more monthly or weekly basis. And they're also, again, they're looking at the sensitivity. That's another role that we play too, to say, look, what is going to happen in the next 6 months to change this? I think you can kind of get lulled in good times into, just thinking that everything is going to be fine, but having to respond to changing customer demand can be can be a big difference for people, and really having to sharpen your pencil on what we want to spend money on, where do we want to invest. If you're making strategic hires, is this the right time to do it or not? And can you provide that comfort for people as you're trying to bring people aboard?
Yeah, I know we were doing, Lucas and I were doing some 13-week forecasting with our portfolio companies on the front end of the COVID situation. Most of those businesses have now stabilized, and some are doing quite well.
Yeah.
Did you do, I'm assuming that you mentioned daily and weekly, I'm assuming you were doing a lot of that work early on in the crisis.
Yeah, it was a lot really early on. I think people have continued to evolve, and they've really looked at, what's a rebound going to look like? And is it going to be, you hear all sorts of buzzwords about this, is it going to be a V where it goes right back up? Is it going to be like the Nike swoosh where it goes up more slowly? And people trying to predict what that's going to be like. And so I think we've helped them model out what that could look like in a couple scenarios. And then for the owners, trying to figure out, well, if it's scenario A, what does that mean for us and how we manage the business? If it's scenario B or C, what does that mean for us? People have looked at layoffs. And so we've seen a little bit of that, and they've looked at, how do they keep people on? And so again, try to be creative in what they're offering, and then what they can do for their employees too. And I think a lot of the people that we work with, they understand how hard it is to get really qualified people to work with. And so they try to do everything they can to keep people on, and then how do they grow kind of coming out of this?
So now that we're 6 months into the year, just talk real briefly about how a business might kind of reforecast and do a 6+6 2020 budget.
Yeah, I think, for a while it was kind of the strategy of hope. This is going to be done in 2 months. This is going to be done in 3 months. And months from now, everything's going to be better. And I think people have kind of stabilized a little bit, like you said, where now they're making definitive plans. If you have diversity in your practice area, I think we found that that's been pretty good, because some of the areas that people were worried about ended up being very bright spots, and some of the other areas, they just naturally fell off just because of the nature of what you're doing. So if you were counting on meeting in person, and now you're not meeting in person, how does that change what you're doing? And so it's really changed how people project what they're doing. Some of these businesses, travel is a huge component of it, whether it's going out to see customers or being at trade shows. And so some of these things have changed how people interact. So it's certainly affecting the spending side, but I think as they try to reconnect with customers, trying to figure out what's the best way to do that, and trying to keep the customers' needs, front and center, when I think behind the scenes, that they're dealing with all sorts of other issues, whether it's with their business or at home, or just their own sanity. And so it's been one of those things where, again, I think people have refocused now, and it feels like we're at a better point to say, okay, forget about the last 6 months. What are the next 6 months going to look like? What's the next year going to look like? And then let's try to make some plans depending on what changes we're seeing. And if we hit these benchmarks, then where do we go from there? How do we pivot?
Any words of wisdom? I know I've had a few people say, hey, how do you even forecast just given so many variables? Do you have any, again, words of wisdom or advice? Do you pick middle of the road? Do you do best case? Not best case, do you do worst case and a best case and do a couple of different scenarios? But any thoughts on how somebody might go through that?
Yeah, I think that forecasting is trying to give the person that's forecasting some comfort with decisions, to know what are a couple of scenarios. A lot of times when you're trying to either gain new work or trying to figure out, do people maybe re-up their annual contracts? You're trying to figure out, how do you make sure that they're comfortable with what they're doing? So they're trying to get creative with their customers, whether it's maybe some delayed terms. I've seen on the real estate side where people have done some creative things with leases to try to get people in there. So they've tried to make it so that if their business goes down, would they still feel comfortable signing a lease based on what they have? So the people have gotten really comfortable trying to make some changes like that for their business, and trying to adjust in a way that whatever happens with the market, they can respond well with. It's not totally easy though. You have fixed costs in businesses, and it's not easy to just go through and make drastic changes. So that's where I think the owners kind of struggle in the sense, and they do try to come up with what's the best estimate, what's the worst and what's the best, and what do we think is more probable and happening, and they try to manage that way. And that's where the more frequent updates are probably occurring too. So once they're getting some traction on things they're seeing, how do they adjust going forward, and does that give them confidence, whether it's to hire people, to invest, or that they really need to make a change because it's not going the way we thought.
That is not easy. And one of the other things now people are talking about is what to do regarding their debt capacity. So how does that change? How do the forecasts change that? Do
Yeah.
they need more, the ability to repay, and other kind of varying operational results? So talk about forecasting debt capacity changes.
Yeah. Companies are really having to model out their cash flows in a way, like I said, what your costs are. What's hard to know is where your revenue is going to be. So modeling out your cash flows has been a big deal. People really, again, I think they went to lines of credit if they could to make sure that they had those, on the early side. PPP loans, I think, helped out a tremendous amount of people and providing them some liquidity and some options. I think people are looking at this a little more long-term now, trying to figure out where do I go and how do I manage for the next year or two? And so looking at various types of loans, I've heard Main Street loans being one thing that we've talked with people about more, trying to figure out what's the next step with what they have. And then just traditional bank financing, where does that go? They've also looked to say, do I need to put money in the business? So we're pretty leveraged in some cases. And do I need to put more money in as an owner? And is that an option? Do I have to call money from my investors? If that's the way a company is financed. So people are really looking at those different options, trying to figure out what's the best way and trying to figure out, if we have bumps in the road, what do we want to have? What type of debt do we want to have? And with some of the lending options, it's giving you a little more runway to have bumps in the road. And so that's what they're looking to do. I've seen banks do some proactive things and some creative things that I think have been good, where they've delayed principal, where they're doing interest only, or they've delayed payment. They're adding it onto the back of the loan, but they're delaying payment. So I think banks have been smart about that and been working with customers, at least from what we've seen and with the groups that we work with, been very accommodating to their borrowers.
And then,
so that may change.
Yeah. And then regarding the banks and folks with lines, do you recommend that companies draw down on their lines so that they have the capital actually sitting in their accounts and 100% available?
I typically don't recommend that. I know people have done that. I typically don't recommend that. I think, the concern for some people is that the bank would just yank it if they don't like the industry. In my experience, they can yank it either way and force you to repay that money right away. So I generally haven't recommended that approach. People I know have. But I think now is the time to have a relationship with your bank, and a solid relationship with your bank where you're proactive with them. You're not just telling them good news, but you're telling them bad news early. And in most banks, I think that we've seen have worked with people as they've done that, but every situation is not as forgiving. And so trying to stay on the right side of working with your banker, letting them know where you're at. Again, I've seen some good things that they have done, but I think on the borrowing side, needing to stay in the right position is important too.
Okay. And Highland Bank is one of the sponsors of Club E, along with you folks at Boulay. Yeah. So again, I appreciate your support and your firm support, as well as the folks at Highland and anybody out there in our listening audience. Feel free again to reach out to Matt. His contact information is in the comments field, as well as you can reach out to Highland Bank. If you put a request in the comments field, we'll help you get connected with somebody if you don't have a contact there. The hashtag today will allow you to get into a drawing for a half hour of Matt's time and assessment. Again, hashtag forecast. And then last but not least, hit that like button and subscribe to our channel. And again, you can listen to us on podcasts. So put your questions in. So I know we'll get questions from our audience regarding the Paycheck Protection Program, loans that provided some significant liquidity to folks. How have those loans factored into how companies are operating?
It's really been interesting to see. In some ways, they've been a great kind of a salvation for companies because the financing was so fast. It was such a hurried process, though, that people have had a hard time understanding, what does it mean? Am I eligible? And there's been a lot of questions about eligibility. And then now, they're looking at to say, what will be forgiven and trying to evaluate that. They've made so many changes to this program as they've pushed it through, which it went through incredibly fast. So if you feel like you're confused over it, you're in good company because it's been a confusing process for a lot of people. At Boulay, we've been really lucky to have a group with us that focus on these loans early on and really help people through it, understanding, what are they getting into on the front side? What is it going to mean? And then now talking through forgiveness, for loans that we think are going to be audited, that were over $2 million, trying to get ready for that audit and trying to get get all their documentation in order if they thought there was gaps. They changed the periods from an 8-week period to a 24-week period to give people the option to try to get full forgiveness. And so again, trying to help people evaluate those things has been something that they've done. And really, again, it's provided liquidity for people that maybe didn't have a line of credit. So your previous question about whether people draw down on a line, well, frankly, there was people that didn't have lines of credit at banks. Just through the normal course, they thought they were flush on cash and they were in a good situation. Well, this has really raised the awareness that we probably should have a relationship with our bank. And if you didn't have a line of credit before, you should definitely have a line of credit. So just a quick plug for the banks out there, for Highland specifically, to make sure you know somebody there and have a contact that you can call on for just such an environment like this. And we always think of lines of credit as insurance policies, that you have some availability, that you have someone that knows you. I think the funding in this round, at least with the PPP, really made it so that a lot of people got funding that needed it and needed it very quickly. I think under normal circumstances, it would have been hard to get funding this quickly and for them to push out as much money as they did. But it sure feels like they did during this period.
Yeah. So speaking of the PPP funds, are you seeing those funds being used to pay down their bank lines, or how are they spending the money, or are companies in essence hoarding those?
Yeah. You raise an interesting question. People have been a little bit afraid of these loans and the money that's come with it. One, just because the guidance has been a little bit limited. So I would say in some cases, we've seen people hoard the money a little bit to say, look, we weren't sure what was going to happen. Sometimes they haven't hit the bad time yet, so they're hoarding it and they're stashing it away for that. But they're certainly looking at that with some uncertainty and feeling like, what do we do? Is the PPP or the SBA going to come in and say that we shouldn't have taken out this loan? So there's been a lot of anxiety on that side, trying to figure out what do people do? Do they spend it? They changed the standards a little bit where I think there was a higher hurdle initially for if you're spending on payroll, and they lowered that a little bit just to change the mix for people. And I think that was helpful. But again, I think there was a lot of uncertainty over that money. I think companies didn't know what they were going to get into when they got the loans. And so a lot of the companies that I've seen, while they used that money to pay for expenses that was appropriate for that time, at the same time, they were almost building up a similar amount of cash as their operations didn't falter during that period. And so they were lucky to go through that. But now they're kind of left questioning, should I have kept it? Should I got it? Where does that leave me? And so it like I said, it's produced a fair amount of anxiety for owners as they're thinking about what to do. On the front side, again, there was so much uncertainty that you just didn't know what was going to happen. At least with some of our companies that have had success stories, they had it in a way that they didn't anticipate. So if you would have asked them in March and April if some of these things would have been big components of their business, they would not have known. And that's not to say they didn't know their business, but it's just what the demand was from their customers changed a lot from what it had been over the last year or two, through this period. So.
Yep. So have a question here from our audience, Matt. And again, remind everybody, #forecast to get in the drawing for a half hour of Matt's time, as well as a box of golf balls. In addition, submit your questions. And just a reminder, subscribe and like, as well as find us on your favorite podcast platform. So this is from Blake. What is the best practice for forecasting when you've completely shifted from an in-person to digital for sales outreach?
You're really looking at the change in how you're having touch points with customers. So before, like you said, it might have just been visits to your customer, and that's what it would have been. And now I think you're looking to track it differently, whether it's phone calls, whether it's, I'll say, Zoom meetings or Teams or whatever medium you choose. I think we're looking at it that way to see, what are your touch points and how do you evaluate it that way? There's still people getting together, and so we know that. But whether it's travel related or not, it works a little bit easier if your customers are in a local market. Obviously, if you're having to get on a plane, that's changed things a little bit. But again, I think people are looking at those touch points to say, look, now how many times have you met with them? If that's the case, where you're having to do that, you're also looking at other things that you can push to them, right? So if you're in an industry where you can provide them guidance on how this, if it's equipment that you're distributing or manufacturing, how can your product help them? And so looking at those things to say, what are you doing to try to help them improve their business, stay fully functional if that's the case. If it's a service business, trying to make sure you got people that can go there and be safe. So in some ways, outlining maybe what your security precautions are, when you're visiting clients. I think that's important.
Mm-hmm. And then, as we've talked a little bit here today about forecasting, it's just a little bit of a different sales cycle, breaking it down into pieces,
Yeah.
makes probabilities and assumptions, and talk to your favorite Boulay representative for their help on that process. Correct, Matt?
Yeah. Yeah. But again, it's not changing the fact that, we've shifted our selling process where I feel like, while some of it's face to face, some of it has been over mediums just such as this. So how does that change over time, and how do you relate to customers? How do you interact? Sometimes this has made sharing technology a little bit easier because you can demo it in a way that I don't think before we didn't know how to use some of these tools before, just 6 months ago. And so I think this has accelerated what we've done with that a little bit in a way that's been really good. And, we always assume that our customers want us there, when the reality is right now there's a strong group of customers that probably don't want us to come out there. So this is a great way for us to see them and to have an interaction where we're maybe not there because they might not be ready for us for whatever reason. They may not be ready for us to be there. So we think this type of technology has really changed things for the better in that sense, where it allows people to meet in person if they want, but also to meet, through technology in a way that's safe for everybody, at least for the time being.
Okay. Have another question from Darren. Actually, Darren's a CFO and a longtime participant in Club E. Thanks, Darren, for your ongoing support. Regarding the PPP loans, Matt, is it correct that expenses that will be applied to loan forgiveness will not be deductible on a tax return? In planning for cash flow, need to plan for the income taxes.
That's right, Darren. That's the way it's currently set up. The initial intent was that the money would be tax-free. And what they've done is to say, well, now the money that's forgiven will be tax-free, but the expenses that you offset against it won't be tax deductible. So in essence, it's made it a taxable amount for companies. So you're exactly right. There's been discussion and they've pushed to make that a change. And it just hasn't happened yet. So as an example, say you got $100,000 through a loan and you're going to ultimately pay $40,000 in taxes on that, just at a 40% type of rate. Really, if it was tax-free, it'd be worth $140,000, so it'd be worth more. And we think that's what their intent was, but that's not how it's evolved. And the IRS has come out, and we think the states would do the same, where they're going to want to try to tax it, going to get some of that money. So that's the way it currently stands. We kind of keep watching to see if they make a change with it, but so far it hasn't changed, despite a few different clarifications and things that have been pushed through.
Okay. And Darren and others, again, to reach out to Matt. Maybe you want to reach out to Matt as this stuff evolves. His contact information is in the comments field. And then again, folks, submit your questions. Got Matt here on the line to answer those for us. All right, next question. One of the things that we talk a lot about here at Club E is growing. Tagline for my firm, Brimacombe & Associates, is grow or die. How are you seeing companies grow during these times with remote working environments?
Yeah, I think people have changed a little bit about what they think is growth. Someone's just holding on to the business you have as growth in this environment. So flat is the new 10%, in some of these environments and for some of these lines. But I think people have understood more that diversity in their customer base is key, making sure they can serve customers in an area that wouldn't be so volatile or sensitive to changing times. But I would say a lot of companies are ultra focused in areas where that's just not so easy to flip, not so easy to change. So, they're really trying to respond to say, how do we meet our customers where we're at? How do we change if it's just not possible? So I used the office supplies example earlier, where if you're an office supplies business and people aren't meeting in an office, what does that mean for you? They're not consuming the same amount of things that they had been in the past. Businesses maybe don't need to be buying chairs the way they had been in the past because they don't have people that they're housing there. Certainly on the real estate side, we're seeing the same thing where, while you may have had people in the office before, now if they can work remotely, people seem to like that in some cases, and they're trying to figure out what that means for them for their footprint going forward. I would say as people, again, as they try to grow during this time, but they're looking at their different product mixes, figuring out what really resonates with customers right now. What is helping them run their business better? That hasn't ever changed. It's just become more focused now as to how they respond. Certainly the purchasing decisions that companies make has shifted quickly. And so trying to stay up with that and trying to pivot quickly, we think is an important piece of what they do. And like I said, trying to figure out where your customer's going, where are they pulling you, what do they keep asking you about, and then do you offer that type of either technology or product or service? We've seen people, M&A is an area that, Rick, you and I talked a little bit about. We haven't seen a huge die down in that area yet. We saw it slow up in some of the early months, so in May and April, and then we saw a pickup in June again as people look to grow. People have a fair amount of cash on hand, and so they're looking to deploy that and trying to figure out, are there customers that are in trouble, or not customers, but people in their area that are in trouble that they could maybe leverage some of what they do, their talent internally, and bring them on board. So again, we think people are definitely trying to grow during this period, but grow, the expectations for growth may have changed. For companies that are thriving, frankly, it's how do they stay abreast of everything? How do they stay on top of all the changes? Because sometimes they went from having, maybe 100 orders a year for a certain product, and all of a sudden they're getting 1,000 in a month. So how do they keep up with that changing demand? How does it affect their supply chain coming up and coming into their business?
Yeah, you brought up the M&A world, which I was just going to ask you about that. So nice segue to that. I know that you do help businesses that are considering selling or going out and making acquisitions. You and I have done panel conversations about that in the past.
Yeah.
Maybe talk a little bit more about what you're seeing on the M&A front.
Yeah. I really expected the M&A front to die down here. I just thought that, with kind of people's lending up in arms and just the uncertainty, and I hate to use that word uncertainty, so I'm sorry about that, Rick. But just, so much turmoil in the market that people would really put that on hold. But I've been surprised that deals keep getting done. Things that I thought maybe could have paused for a moment, that they've pushed forward, that people have pushed forward and done. Again, I think that there is a fair amount of money that's still out there. I think if they were engaged with companies already, if they were looking at them, I don't think that's changed. Their modeling has probably stayed on 2019 to say, okay, is that a normal year? Once we get through this stretch, will it go back to 2019? So that's what they're trying to evaluate on the buy side, trying to see what does this look like once we push through this. For certain companies, it shows the resiliency of what they do. It shows how strong maybe their position is with customers. And so that's been, people that have found companies like that have really latched on to those companies. And they know they've got one that they think will lead them not only through this stretch, but into the years to come. That's doesn't change the structure of how they're trying to do this. And certainly for owners that wanted maybe multiples that dealt with, where they were at in 2019, there's been some changes for that and maybe pressures on how they do that.
Yeah, I was going to ask you about multiples a little bit. So I was or am involved with the portfolio company of mine. We entered due diligence with a PE firm in the fall, kind of work through this, the slowdown around the holidays. And then we're getting pretty close to the finish line. COVID hits. We were able to get that done. And actually, we were able to get it done without the multiple changing. I'm wondering what you're seeing in terms of what deals are actually getting done and how multiples have been impacted given the economic disruption.
Yeah, I think there's definitely been pressure on multiples. I think, it's not totally clear, because if they maintain the consistent multiple, but your business goes down, your EBITDA goes down, in essence, the valuation has gone down. I think people have fought that off in a couple of ways. One, they're seeing a rollover equity. So if you as a seller of the business are going to roll 20% over, maybe you're rolling 40% over, because maybe this time you didn't get the total valuation that you want, but you anticipate it coming within a short period of time. And so we've seen and we think it's certainly headed where people are going to leave a little more in the business than they might normally otherwise have done. We've seen it where people have tried to structure more with contingent earnouts. So when you're predicting that things will turn around, that's a way for both the buyer and the seller to make sure that they're a little bit insured, with that or for that. And so we think that'll play a bigger part in what people are doing going forward, where they're going to maybe pay them closer to what they think the business is worth right now, but they're going to give them some upside. That upside also protects the buyers as they're looking to buy, because if the results don't turn around to be what they think they are or as quickly as they think they should, then they're protected and not having to pay. And so we see those that are going to be used. I think, our role maybe in some of that is trying to feel out, is that really going to be a thing that you're going to collect? Is that contingent earnout? And so we're helping people understand what those earnouts mean, how they're going to be calculated, and then doing a sensitivity to try to figure out, is this going to be cash that they're going to actually get? Or is the hurdle so high that there's just not going to be something that they're going to be, is going to be in their reach? So we're really looking with people like that, or they're trying to figure those types of things out and structuring. And again, trying to get creative to say, this is the dollar amount we want to get to. Well, how do you get there? And how do you provide an environment that's going to protect the buyer's interest and the seller's, at the same time?
So a couple tweaks to structuring the transactions you've gone through. You mentioned any others before we move on that come to mind?
Those are the two that we think are the most prominent. There's always been seller financing in some of what people do. I haven't heard of financing being a huge issue right now. Certainly it feels like rates have come down. So I don't know that that's a huge barrier for people to do things, but I know that could. Feels like there's enough buy-side money driving some of these transactions that hasn't been a huge hurdle. But we definitely see that seller financing, especially for smaller businesses, could be a bigger part of this.
Okay. So as we aim to the finish line here on our talk, and again, for those of you out there that would like to connect with Matt after the fact, his emails in the comments field, hashtag forecast to get into the drawing for a half hour of Matt's time, as well as if you're a golfer, get a box of balls. I'm also, if you want to reach out to Matt and get any water skiing and water surfing or boat surfing tips, he's your man on that. But Matt, if you had to leave the audience with one main thing to take away today from our conversation, either something you'd like to reiterate that we touched on, or maybe something that we missed, what would that be?
Well, I'm always looking for a spotter. So if you want to come out boating with us and you enjoy the water, let me know, because we're always looking for that.
Although you do have to tell everybody what time a day you might be talking about.
Well, we've been getting out pretty early some mornings, which has been 5:30, 6 o'clock in the morning. So sometimes it takes an early riser to get out there with us. I would say, I think forecasts have often intimidated people, especially non-financial people. But really what a forecast is meant to do is to give you some visibility into what's going to happen in the future so you can make decisions that you feel more comfortable with. So we like the use of forecasts when it can help people make decisions, certainly with business owners as they're trying to decide what to do. Again, often the business owners that we're involved with are in multiple businesses, and so they're moving money around a little bit. So trying to make strategic decisions, we think that that's important to do. Some of the old metrics that people had may be too distant, and you need to really be looking on a weekly basis, a monthly basis, where before they might have looked at their quarterly, financials and been comfortable. Now it's kind of sharpening the pencil. When they're having to make tough decisions, we find that it's also helpful when they know, hey, what do we think is really going to happen here? And certainly before they want to do layoffs, they want to know what's the likelihood that this is going to change in a month, 2 months, 6 months, and what does it look out before they have to make some dramatic decisions. Sometimes you're making decisions on whether to buy or to lease. And so people are looking at a forecast for the same reason, to try to make that decision and try to stretch their dollars a little bit. So we find that again, when we go through the process with people seem like they're more comforted, they know where they're going to head, and they feel more confident in the decisions they make. And that's really what our goal is, to help them feel more comfortable in the decisions they make. We're trying to tie it together with them too, as they think about their financing needs, as they think about different options that they have with the company to maybe cut back. Where can they cut back that it's going to have the impact that they want? At the same time, if they're looking to invest, and thinking it's a good time to maybe expand in an area too, trying to help them figure out what that looks like too. Is there a low cost way for them to get into an area or a product to grow? I don't know if any of you have ever been down to Cambria, but there's a tour that Cambria will put on occasionally. And it's just a fantastic tour. And it looks at the footprint of how they've grown. They grew through the 2008, crisis that affected so many people in a way that seemed pretty incredible. So we know the businesses grow out of this, not just Cambria, that's just the example that I used, I guess, but seeing how people respond. How do we then change how we view our relationship with our customers? How do we keep them front and center and respond to the things that they're asking for, the things that they need, even though the way we communicate with them has definitely changed over these past few months?
Well, Matt, we've had you on Clubby a couple of times. It's always been a good conversation. We hope that you'll join us again. Folks who want to reach out to Matt, his contact information is in the comments field. Thank you very much for joining us today, and look forward to having you back.
Thanks, Rick. Thanks for your team, and good to talk with people that piped up and had questions too. Look forward to talking to the people afterwards if we can help them and talk them through what the next steps are for them.
Great. Thanks again.
Have a great week.